2-1 buy down one is big right now though,
we love
because it can really help people to still get into an affordable home.
Kat, thank you so much for having me, and I'm here to answer any questions you guys have.
What is this 2-1 buy down?
A 2-1 buy down is a really cool feature that the seller would have to pay for, or maybe a builder to pay for, to put on your loan. What it does is it reduces your interest rate by 2% for the first year, and then by 1% for the second year. So
that's huge.
Just a quick example, if the rates are at 7%, the 2-1 buy down would put your first year, the rate would be at 5%, and it steps up to 6%, then year 3 moving forward would be at that 7%.
That's excellent, so it gives you more buying power then.
Absolutely.
Okay, very good. And so then what is the difference between a fixed rate and
adjustable rate?
Adjustable.
A fixed rate is exactly as it implies. It's a fixed rate. That rate will not change for the life of that loan. The only way to change your fixed rate is to pay off the loan, refinance, or sell the house. An ARM is a fixed rate for a period of time. So there's different lengths of time that ARM might be fixed for. For example, a 5-1 ARM would be an adjustable rate that is fixed for the first 5 years. Then for the remainder of the loan term, which typically loan terms are 30 years, it could vary based on an index. Typical indexes are the LIBOR or the SOFR. So just depending what the product is, there might be different indexes it can adjust to.
Okay, everyone's saying about a market crash right now, and we are not going into a housing crash like 2008. Can we talk about why this is different than 2008?
Absolutely.
To clear up any misunderstandings.
This market is different than the market in 2008. I actually joined the mortgage industry in 2009, right after the last crash. So I had firsthand knowledge of what happened and how things went sour. Had a lot of accounts and saw some of the bad lending practices that went on. I will say we have a lot better fundamentals in this market than we did before. So even though there might be a downturn in the economy, it doesn't mean there's going to be a housing market crash.
Okay.
So the big difference this time is we have a shortage of housing supply, but the last time we had a huge surplus of supply. Also, the people in those houses were qualified with the ability to repay these loans. In the old days, we used to say if you could fog a mirror, you could get a loan. We'd literally just have self-reported income loans. We'd have a lot of exotic loan products or subprime loan products, or people who may not have been able to make that payment in the future that were getting into houses. This time, we do not have that scenario. We have everyone who's in the house has been qualified to make that payment. So we're in a lot better position, and I mean, if you go out there, there's still not a ton of houses on the market. So you're going to see, until the supply comes up, demand's still strong.
Yeah, definitely. Okay. What type of loans do you offer right now, and how much money is expected for the buyer to put down on a house?
Well, we offer a wider range of loans. So Southern Trust Mortgage offers conventional, FHA, VA, there's down payment assistance, there's USDA, there's a wide variety out there. So my job is to help pair you with the best program possible. Now, some programs have as much as 20% down, 25% down, some have no money down. So really, talking to me is a good first step, because I can help identify how much you're going to need to put down and the best loan program that's going to fit your needs.
Okay, perfect. And then also, do you handle underwriting in-house? What is the typical time length that, once a buyer goes under contract, how many days does it take them to close on their home?
We underwrite all of our files in-house. We have local, underwriters that we work with closely. We're not some giant mega corporation that doesn't know their people. I know all 3 of my underwriters personally. We do a lot of loans with them, and I can pick up the phone and talk to any one of them. It's a really great resource for me to have, and it's great for me to share that with you, because it helps you. If you have any questions about qualifying, I can get those answered very quickly.
That's awesome. Very good. All right, and then of course, the big question right now, with interest rates being as high as they are, is now a good time to buy?
It is a great time to buy. Not only are interest rates high, but they could go higher. So really, when we look at a market, 3 things can really happen with interest rates, right? They can stay the same, they can go down, which is what we all want, or they can go higher. If you wait to buy, and 2 months from now they're at 9%, would you be mad at a 7% interest rate, or would you be happy that you had that? Now, if rates go down, we always have the options to refinance. None of our mortgages that we offer have any prepayment penalty, so you can refinance at any time. So we'd love to take advantage of that savings in the future, or at least make sure we don't get higher rates in the future.
Wonderful.
Also, another really cool thing about this market is the higher rates have eliminated some of the multiple offers and bidding wars you've been seeing. So there's a lot of inventory out there that's starting to sit a little bit longer. So you're seeing sellers come in and maybe be more willing to negotiate. Maybe they're willing to pay closing costs. it's a great time in the market, and take advantage of this slow down while it lasts.
Yeah, and it kind of goes back to the, marry the house and date the interest rate.
Absolutely.
You can always, refinance in 12 months and get a lower interest rate.
Absolutely, and we'd love to do that for you.
But the house might not be there in 12 months.
Yeah.
So also, how much money is expected to put down, for, let's say, a first-time home buyer?
Yeah, well, so first-time home buyers typically put anywhere from 3% down. We have some grants and down payment assistance programs that allow no money down. Also, there's programs if you're a veteran or if you're looking maybe in a more rural area that we could look at, such as a VA loan is 100% financing for vets, or USDA is a good option in rural areas. It's 100% financing for people in those designated areas. So there's a lot of different options, and
FHA is a good loan right now.
Absolutely.
Too, right? Because it's 3.5% down.
Yep. So
Okay.
conventional allows 3%, FHA 3.5%. So it's more so there's a lot of options out there, and I want to explore them all for you. And depending on your exact scenario, there might be ones that fit better for you.
Okay. Anything else that we should know working in this market with the interest rates that they are right now?
Yes, it is extremely important to get with a good agent who knows your area.
That would be me.
Someone like Kat can help you so much in finding the right house and answering just general questions. So many people, have an idea of what they want, but they haven't really started looking out to see what's feasible in the area. If you want a house that's not 20 years old, or you're saying you want a brand new home, well, maybe certain areas of Cary might not be your best bet. Kat's your local market, leader, and she knows where to direct you and how to help answer those questions.
And I always definitely recommend working with Jimmy. I love Southern Trust Mortgage. Still a good time to buy, and there's options out there for everyone. And thank you very much. I appreciate it.
Of course, thank you so much for having me.
Bye-bye.